Hey gang, how's it going? It is Wes again with Pikes Peak Trades. And at this kind of crucial market juncture that we're at, the end of the month of November, wanted to chime in here with a quick video giving you some monthly candle updates. Also, a chance for me to show you my big picture counts. Haven't done this in a while. So we'll go through IWM, XLF, DIA, SPX, and QQQ on the monthly candles, and talk about a technical situation that I think triggered today, and give you an idea where I think we may be going over the next couple months. So by far the weakest ETF of what I track is IWM. A disappointing day. It was up almost 2% pre-market in futures and RTY, and then just got hammered back again. I mean, clearly there doesn't seem to be much love right now for IWM, and the monthly candle is showing that. So it's down over 2% on the month. This is a concerning look. You would probably call this a bearish shooting star. But what I would point out, two things I would point out, is it has not yet lost its 8-month EMA. Now, if Tuesday is decidedly bearish and it closes below this EMA, it's got to get to the mid 219s or lower. That's going to just make that candle look even worse, and probably at that point need to say a good chance that that primary one wave is actually in. If that doesn't happen, I would kind of say take a look at some other monthly candles that were a little bit ominous. Here we had a bearish outside candle in March, but it resolved within the range, but it resolved upwards in April. Here we had a bearish engulfing candle in July, and again, it didn't break the range, obviously, in August, but it was positive on the month. Had another bearish engulfing candle in September, and it was positive again. So just because this has potentially a bearish look doesn't mean that we're yet ready to call a top in place. IWM, all the way through this consolidation, which has lasted for about 9 months, it has not yet lost its 8-month EMA. So that's kind of the marker that I'm looking for. I am still counting here on IWM the possibility that it is in an ending diagonal count. Here's the daily. Now that daily candle is ugly. It is a bearish engulfing candle. It would be rare for it to not at least attempt to try to follow through with the spike lower. It closed a second day in a row outside its lower Bollinger Band, which is not unlike what happened in mid-July and mid-August. But the ominous thing here for bulls is that in each of those situations, it had a nasty gap down the next day. Now, what's different about that situation is XPX and QQQ are not downtrending. Today, showing some strength moving up. SPX out of its lower BB, and QQQ with the really nice day up over 2%. So that does give bears a little bit of hope that maybe we will see this resolve upwards in an ending diagonal and get it to finish here closer to my targets. Let's take a look at some other monthly candles. So let's get in here to the Dow. So we're looking at the Dow Jones. You're going to see my longer term count is at the COVID lows, put in a super cycle 2 low, and we're working on sealing the first cycle 1 high. So I think we still are in primary 3 of cycle 1. If IWM is topped, then the Dow is likely topped. This candle here, although the Dow is negative on the month, yes, it's red. It's maybe a little bit of a bearish spinning top, but not decidedly bearish until, again, it loses some supporting MAs, and that would be the 8-month EMA, just over 34,000. So I do think the Dow still has a chance to rally up to finish a primary wave. Here's the weekly. I think it just put in a 1-2 off of this intermediate 4, working to finish intermediate 5 of primary 3. And if I'm right on that, the suggestion is that the Dow is really going to make a big move up. That means we need to see the blue chippers get on board here. Okay, let's take a look at XLF. So sorry, that's the short term. Here on the weekly, let's flip it to the monthly. There we go. Okay, and I'm counting on XLF looking just like IWM for a primary one top. So this makes sense that the two of these would count roughly together because of the large component that financials make up within IWM. Obviously, the smaller cap banks, XLF predominantly are big broker-dealer banks, but the two, I think, are tracking pretty well together. Just like IWM, there is a chance that that primary wave is topped. It's so far a red candle, but it's an inside month candle. And the technicals here are much stronger. It's much, much further away from its 8-month EMA than IWM and DJI. So we're kind of gradually getting stronger as we show the strength of these indices. So I still do have XLF working again on one final wave up to complete a primary wave. So that obviously means if this does resolve bullishly to get new all-time highs in IWM, in the Dow, and in financials, that the upcoming correction is going to be a nasty one. We're looking at primary degree corrections. Now, of course, if I'm wrong and it doesn't resolve, then what we see here on the daily XLF maybe working to recapture its lower Bollinger Band, that's going to fail. And that would be a condition that we haven't seen. So if I take you back so far in the recent months of 2021, once XLF has recaptured that lower Bollinger Band, it's made nice moves up. Here's June. Here's July. It's more similar right now to September. So very similar in a hammer candle and then a second follow-through candle. If history rhymes here, this suggests that the remainder of this week in financials would be strongly green, and then in IWM would suggest the same. Okay, so that's my primary suggestion right now. Obviously going to be super interesting to see if that plays out. So let's get into, to finish up here, our SPX on the monthly candle. Okay, now bears are going to say that that's beginning to also look like a shooting star. I would point out that bears probably also said that February looked like a shooting star, and then the month of March was up over 4%. So I'm not going to give any worry to the look of that candle here unless it closes the month red. So if we see a collapsing move here, that would have to take the S&P below 4610 on Tuesday. If that happens, I'm going to say we need to abandon the bull boat, and we're probably looking at primary tops already in place in IWM, the Dow, and XLF, which means that this intermediate wave 3 would then be in place. I personally think we still have more room to go. Okay, so I think that we haven't yet reached the topping target. I think we're gonna keep moving up and approach that 5,000 key marker for intermediate 3 before we get the pullback. So the pullback would suggest that it would be of lesser degree than the Dow, than IWM and XLF. They'd probably get punished a little bit more. S&P, the Dow, the Qs, being in a degree 4 would probably see relatively a little bit less selling. Okay, so again, I'm not concerned on the monthly look. There is a little bit of course, developing divergence along that monthly RSI, but as we've seen time and time again, this can take months to play out. So I think a wave 3 high, then that wave 4 pullback is going to draw that divergence out. And then I would be projecting at some point, maybe mid 2022 into 2023, we really see some struggle in the markets. Okay, let's finish with the Qs. And I'm showing you on Qs what I think a bearish candle does actually look like here on all of these that look like either shooting stars or a bearish spinning doji. And we don't have that look, okay, on the Qs. It is right at this trend line here in log scale, but that in itself isn't enough to say that we're going to top. Now, I have this divergence line shown on the RSI, but really that divergence line shouldn't go all the way back to February. I'm not showing that out of reference to this P3 and P4. That's more in reference to a super cycle high that I think could be coming at some point in 2022. But I think, showing you on the weekly, I think the Qs have more room to run. So I'm looking anywhere from 411. I actually think the upper side of this into the 440s is maybe a little bit more likely. I've got a more bullish count in purple, at least, that would show shallower pullbacks, but I really don't think that's as likely. I think that the next high that we do get, the next diverging all-time high in Qs, is going to be the one that's going to trigger a pretty significant sell-off. Okay, so in order of weakness, I showed you IWM, then the Dow, then XLF, SPX, and the Qs. And I'm not so concerned on the monthly candles, at least from XLF into the Qs. Let's see how the month finishes. I did want to point out to you, let me quickly get out of that, into here, that we have the VIX sell SPX buy trigger here at the close. So we are seeing the fear-induced spike on Friday got hammered back down beneath the upper Bollinger Band. And if 2021's history is any suggestion, then I think that means that the S&P is due for a run to its upper Bollinger Band. So we see here in July, in August, and September, and except for September, which did make a lower low, the S&P ran back up to that Bollinger Band. I think September was a different case because the indices were already beneath all of their key moving averages. Here we're actually above them except for the 8 days. So I'm actually leaning towards a surprising run into the end of this week. That would give the S&P a chance to challenge an all-time high before pulling back and working on then creating the subdegree moves of a wave 5 that would eventually put it up to, let me get back to that monthly here, would eventually punch it up towards that 5,000 target on the SPX. Okay, so always interesting, ever interesting. Certainly hope that this sheds a little bit of light on where we're at into month end. And let's see where we end up for the rest of the week. A good day for the bulls today, but they got to continue it on Tuesday.